Welcome to a deep dive into Crompton Greaves Consumer Electricals,
Crompton Greaves.
or CGCEL for short.
Yeah.
You sent over a bunch of stuff about their Q2 results for fiscal year 2025.
Oh, yeah. Lots of stuff.
We've got the press release, the financial statements.
Standalone and consolidated.
We've got an investor presentation, and even some suggested podcast questions.
A real mixed bag.
Yeah. So consider this your cheat sheet to understanding how CGCEL is actually doing.
How they're doing, what their plan is, and what it all means looking ahead.
Yeah, and the first thing that jumps out is just how consistently they've been growing.
Consistently growing.
Standalone revenue is up 11% year over year.
Wow.
That's like a cool 1645 crore.
That's impressive.
And even the consolidated revenue, which includes all their subsidiaries,
Right?
grew by a respectable 6% to hit 1896 crore.
Okay.
But here's the kicker. This is their fifth quarter in a row with double-digit standalone revenue growth.
Fifth quarter in a row. That's
Hey.
not something you see every day.
Especially in this industry.
Especially in the consumer durables industry.
Yeah, it can be pretty fickle.
Up and down all the time.
So this consistent upward trend suggests that they're doing something right.
Doing something right.
Yeah, consistently capturing market share
Right.
and keeping customers happy.
Keeping those customers happy.
Okay, so we know the overall picture is rosy,
Rosie.
but let's zoom in.
Okay.
If we break it down by segment, the electric consumer durables segment, or ECD,
ECD.
is a real standout.
What did they do?
They saw a whopping 13% year-over-year growth.
13%.
And that's despite some regulatory hurdles they had to jump over,
Yeah, like what?
like the transition to BIS norms
No, right. The Bureau of Indian Standards.
for fans and appliances.
Yeah.
These norms set quality and safety benchmarks, so companies have to adapt.
You have to adapt their manufacturing and sometimes even pricing.
And the fact that CGCEL managed to navigate this and still post such impressive growth in the ECD segment is a testament to their adaptability.
Really is, yeah.
It's like they're doing a dance, right? Keeping up with the changing steps while still leading the whole routine.
I like that.
And speaking of leading, I love that little detail in the press release about their Arno Neo water heater and Grace mixer grinder being top sellers on Amazon.
Oh, yeah, I saw that.
That's got to be a good sign for consumer appeal, right?
Absolutely. Positive online reviews are gold.
Especially these days.
These days, especially, yeah, when you're up against a ton of competitors.
Key competitors.
It shows they're hitting the mark on features, quality, and price.
The whole package.
A whole package that consumers are looking for.
All right, on to the next act, the lighting segment.
Lighting.
Now, this one might seem less flashy at first glance.
Less flashy.
Only 6% year-over-year growth.
Okay.
But you have to consider the context.
Context.
This industry has been grappling with price erosion, meaning the average selling price of products has been going down.
Oh, so for them to grow.
So for CGCEL to not just grow, but actually lead the industry in growth despite this headwind is pretty remarkable.
Pretty remarkable.
Yeah, it tells us they're not just reacting to market pressures, they're strategically maneuvering.
Strategically maneuvering.
Their focus on premiumization
Premiumization.
that's offering higher value, higher priced products
Makes sense.
is likely playing a big role here.
Yeah.
They're also branching out, offering more outdoor lighting and accessories.
Opens up new revenue streams.
So it's not just about selling more bulbs, it's about selling better bulbs and more diverse lighting solutions.
Oh, like that.
Speaking of diverse, remember that interesting tidbit about the Bengaluru Satellite Town Ring Road project?
Oh, yeah, I read about that.
CGCEL snagged that deal to supply all the fancy LED streetlights,
Fancy.
which shows they're not just playing in the consumer market, they're also making waves in the B2B space.
Smart move.
Tapping into different customer segments makes them less vulnerable
Less vulnerable.
to fluctuations in any one market.
Right, spread the risk.
It's like diversifying your investment portfolio.
Exactly.
Okay, last but definitely not least, we need to talk about Butterfly Gundamanthy Appliances Ltd.
Butterfly.
CGCEL acquired Butterfly a while back,
Right.
and now we're seeing signs that this little butterfly is starting to spread its wings.
Let's see.
The revenue for Q2 landed at 258 crore,
Solid.
which is solid.
Yeah.
But what really caught my eye is the improvement in their EBITDA margin.
EBITDA margin.
And for anyone who isn't a finance whiz, EBITDA basically measures a company's profitability before accounting for things like interest and taxes.
Okay.
Think of it like getting a peek at their core earnings power.
Core earnings power.
So seeing Butterfly's EBITDA margin expand sequentially by 380 basis points.
380 basis points.
That's 3.8 percentage points.
Okay.
To reach 8.9%
Yeah,
is a really positive sign.
really positive.
Hold on back up for a second.
What's up?
Basis points.
Basis points.
I remember getting tripped up by those in business school.
Oh, don't worry. It's simpler than it sounds.
Okay.
Basically, 1 basis point is just 1/100th of a percentage point.
Okay.
So when we say Butterfly's EBITDA margin increased by 380 basis points, it means their profitability improved by 3.8%.
3.8%.
Small increments, but they can add up to big changes in the long run.
I got it. Thanks for the refresher.
No problem.
So Butterfly's getting more profitable,
More profitable.
which means CGCEL's investment is starting to pay off.
It's paying off.
But I'm curious, what's the secret sauce behind this turnaround?
Well, they've been strategic about pricing,
Pricing.
making sure they're competitive while still maintaining healthy margins.
Okay.
And they've also been working hard to streamline their operations,
That's sweet.
cutting costs where they can without sacrificing quality.
Smart.
Plus, they seem to be riding the festive season wave pretty well,
Oh, yeah.
seeing a 42% jump in sales across all their categories and channels compared to the previous quarter.
So it sounds like a combination of savvy management and good timing,
It really does.
which is a pretty potent recipe for success.
For sure.
Now, I know CGCEL has this grand plan they call Crompton 2.0,
Crompton 2.0.
which is all about accelerating growth and making their shareholders happy.
Making those shareholders happy.
But before we dive into the nitty-gritty of that, let's take a breather and come back fresh to unpack what this strategy really means for CGCEL's future.
Sounds good. Okay. All right, let's unpack Crompton 2.0.
Okay.
This isn't just some fancy marketing jargon.
Right.
It's their roadmap for the future.
Roadmap.
And it's built on 4 key pillars.
Ooh, pillar sounds impressive. I'm all ears.
All right, so the first pillar is all about protecting and growing their core businesses.
Okay.
Think fans,
Fans.
large appliances like refrigerators and washing machines and pumps.
So the basics.
Yeah, these are the bread and butter of CGCEL.
Yeah.
And they're not about to let go of that.
Makes sense, but it's not enough to just hold on to what you've got.
Nope.
You have to keep evolving, right?
Exactly. And that leads us to the second pillar,
Second pillar.
venturing into new segment.
New segments.
CGCEL calls these white spaces.
White spaces.
So which basically means areas where they see untapped potential,
Okay, so they're branching out.
branching out.
But where exactly are they branching out to?
Well,
The investor presentation was a little vague on the specifics.
true. They're playing their cards close to their chest.
They are.
But that's where our detective work comes in.
I love a good puzzle. So lay it on me.
All right.
What are some of the clues we've got?
Well, they've already dipped their toes into the built-in kitchen appliances market.
Okay.
And one of the pillars of Crompton 2.0 is winning in the kitchen.
Right.
So it's not a stretch to imagine them expanding further in that direction.
Ooh, maybe high-end built-in ovens and dishwashers?
Yeah?
Or maybe they'll go the smart kitchen route
Smart kitchen.
with appliances that can talk to each other
Yeah.
and be controlled from your phone.
Those are definitely possibilities.
They are.
But they could also move beyond the kitchen altogether.
Beyond the kitchen.
Think about it.
Okay.
The consumer durables landscape is constantly evolving.
Always changing.
New trends are popping up all the time.
All the...
Smart home solutions, energy-efficient appliances, personalized wellness devices.
Oh, wow.
The list goes on.
And CGCEL has already shown they're not afraid to innovate.
They have.
Their Silent Pro Blossom Smart Fan, winning that Good Design Award in Japan,
Yeah.
is a pretty clear signal that they're not just following trends, they're setting them.
Setting the trends.
Precisely.
They're thinking outside the box,
Outside the box.
which is crucial in a market that's becoming increasingly competitive.
So competitive.
Now, venturing into new segments always comes with risks, of course.
What kind of risk?
New competitors, new market dynamics, new consumer preferences to figure out.
And don't forget the investment required.
Investment.
Research and development, marketing, building new distribution channels.
Right.
It all adds up.
It's a strategic gamble,
A gamble.
but one that could pay off big time if they play their cards, right?
I see.
That's what makes this whole deep dive so fascinating.
It is.
We're watching a company in transition, making bold moves that could reshape the consumer durables landscape.
It's like we've got front row seats to a high-stakes business drama.
I like that.
But before we get too caught up in the future, let's swing back to the present
Okay.
and take a closer look at CGCEL's financial health.
Financial health.
We talked about revenue growth,
Right.
But what about their profitability?
Well, their EBIT, which stands for earnings before interest and taxes,
EBIT.
tells a positive story.
Okay, good.
Both standalone and consolidated EBIT grew by double digits year over year.
Double digits.
Standalone EBIT saw an 18% jump to reach 160 crore,
Wow.
while consolidated EBIT climbed 16% to hit 165 crore.
Okay.
And even more impressive,
More impressive.
their EBIT margins expanded,
Expanded.
meaning they're squeezing more profit out of every rupee they earn.
Yeah, the press release highlighted a 60 basis points year-over-year increase in standalone EBIT margin,
50 basis points.
which landed at a healthy 9.7%.
Okay.
Their consolidated EBIT margin reached 8.7%,
8.7%.
which is also nothing to sneeze at.
Nothing to sneeze at. And remember, they achieved this margin expansion while also significantly ramping up their advertising and promotion spending, a whopping 69% increase year over year.
They're not shy about investing in their brands.
They are not.
They're playing the long game,
Long game.
building brand equity that will hopefully pay dividends down the road.
Hopefully.
Now let's get granular
Granular.
and look at the segment-level financials.
Okay.
Seems like the ECD segment is their star performer,
ECD.
delivering an EBIT margin of 14.8% in Q2.
Wow.
That's 60 basis points higher than the same quarter last year,
60 basis points.
indicating that their focus on premiumization and cost optimization in this segment is bearing fruit.
Bearing fruit.
And even their lighting segment,
Lighting.
which is facing those industry-wide pricing pressures,
Yeah.
managed to improve its EBIT margin to 10.7%,
Okay.
up 20 basis points year over year.
20 basis points.
So both segments are pulling their weight,
Pulling their weight.
which is a good sign for the overall health of the business.
Yeah.
But profitability is only part of the story.
Right.
What about cash flow?
Cash flow.
I remember my finance professor drumming into our heads that cash is king.
He was absolutely right.
He was.
Cash flow is the lifeblood of any business.
Holy flip.
It determines a company's ability to invest in growth, pay dividends to shareholders, and weather economic storms.
Those storms.
And the good news is
What's the good news?
that CGCEL reported strong cash flow from operating activities
Operating activities.
for both their standalone and consolidated businesses in Q2.
That's a reassuring sign.
It is.
It means their core operations are generating enough cash to fuel their growth ambitions
Fuel their growth.
without having to rely heavily on external financing.
Exactly. It gives them the financial flexibility to pursue their strategic vision.
Strategic vision.
And speaking of financial prudence,
Prudence.
they're also maintaining a healthy balance sheet,
Healthy balance sheet.
their debt-equity ratio,
Debt equity ratio.
which measures how much debt they're using to finance their assets.
Yeah.
Stands at a low 0.08.
So they're not over-leveraged,
Nope.
which is especially important in today's economic climate,
Today's climate.
where interest rates are on the rise.
On the rise.
High debt levels can be a real drag on a company's profitability.
A real drag.
Right? It's like carrying a heavy backpack while trying to climb a mountain.
I like that.
CGCEL's low debt levels give them the agility to navigate challenging terrain.
Agility.
Now let's switch gears for a moment
Okay.
and talk about something that's becoming increasingly important to both investors and consumers.
What's that?
Sustainability.
Sustainability.
We touched on CGCEL's Green Pro certification for their ceiling fans earlier,
Right.
but I'm curious, what does this certification actually entail?
Well, it's awarded by the Confederation of Indian Industry, or CII,
CIA.
and it signifies that CGCEL's ceiling fans meet stringent environmental standards.
Environmental standards.
It's likely related to energy efficiency, the materials they use, and their manufacturing processes.
So it's not just a marketing gimmick.
Not at all.
It's a real commitment to reducing their environmental impact.
A real commitment.
Exactly. And in a world where consumers are increasingly eco-conscious,
Eco-conscious.
this certification can be a powerful differentiator.
You can.
It shows that CGCEL is not just chasing profits,
Right.
they're also considering their impact on the planet,
Impact on the planet.
which aligns perfectly with their CSR initiative,
USR.
corporate social responsibility,
Right.
which is all about giving back to the community and making a positive impact beyond their core business.
Beyond the business.
Remember those suggested podcast questions we had in our source material?
Oh, yeah.
One of them was about their digital transformation and e-commerce initiatives.
Digital transformation.
It seems like they're really making strides in that area.
Strides.
They mentioned in their investor presentation that their e-commerce channel crossed 200 crore in revenue this quarter.
That's huge.
It's their highest ever quarterly sales from that channel.
Wow.
And it shows they're tapping into the growing trend of online shopping.
Online shopping.
Remember, go-to-market excellence.
Go-to-market excellence.
One of the pillars of Crompton 2.0.
Yeah.
This is a perfect example of that.
It is.
They're not just relying on traditional retail channels.
Right.
They're expanding their reach through e-commerce and other digital platforms.
Exactly.
It's like they're building a multi-lane highway to reach their customers.
I like that.
Making sure they're present wherever consumers choose to shop.
Wherever they choose to shop.
And it's not just about selling products online.
Where else?
They're also leveraging digital technologies to empower their sales force, improve their connection with both consumers and channel partners, and streamline their operations. They even launched a brand new website recently.
Oh, wow.
Focusing on a mobile-first, user-friendly experience.
Makes sense.
It's clear that they're serious about their digital transformation.
Serious about it.
Absolutely. They recognize that the future of retail is increasingly digital.
Increasingly digital.
And they're making the necessary investments to stay ahead of the curve.
Ahead of the curve.
Now, before we wrap up this part of our deep dive,
okay,
let's circle back to Butterfly Gandhimathi Appliances Ltd.
Butterfly.
We talked about their improving margins.
Right.
But what about their overall strategy?
Well, from what I gathered from their investor presentation, they're focusing on 3 key things.
3 key things.
Strengthening their distribution network, pushing premium products, and launching new products in the second half of the year.
It's a strategy that echoes CGCEL's broader approach.
It does.
And it seems to be working. They're maintaining market share in their key categories. And they've successfully implemented pricing actions despite intense competition. Plus their cause-based marketing campaigns.
Cause-based marketing?
Like the one they ran during the Onam Festival.
Yeah.
Are a clever way to connect with consumers on an emotional level. And build brand loyalty. It's all about creating a compelling brand narrative. Something that resonates with consumers beyond just product features and prices.
Beyond the basics.
And that focus on premiumization is consistent across both Crompton and Butterfly. It's clearly a key part of their growth strategy. Indeed, they're recognizing the growing demand for higher quality, feature-rich products. And positioning themselves to capture that segment of the market.
Makes sense.
So it seems like Butterfly is flapping its wings in the right direction.
Flapping those wings.
Aligning with CGCEL's overarching vision for growth and profitability. But there's one more piece of the puzzle we need to examine.
Okay, what's that?
Their corporate social responsibility initiatives, or CSR. It's becoming increasingly important for companies to demonstrate their commitment to social and environmental causes. And CGCEL is no exception. So let's delve into CGCEL's CSR initiatives and see what they're doing to make a difference.
Right.
That will be a great way to round out this deep dive.
Sounds good.
All right, we've covered a lot of ground.
Lots of ground.
CGCEL's financials, their ambitious growth strategy,
Right.
their digital transformation.
Uh-huh.
But now it's time to shine a light on something equally important.
What's that?
Their commitment to corporate social responsibility.
Oh, CSR.
Or CSR for short.
Right.
And CGCEL seems to have a pretty impressive spread when it comes to CSR.
Okay.
Their investor presentation highlighted 3 key initiatives.
3.
Saksham Chajivan and Naidisha.
Okay.
Let's start with Saksham, which focuses on empowering women in manufacturing.
Empowering women.
They've partnered with Tata Strive to create a skill development program specifically for women electricians. It's a fantastic initiative, addressing 2 important issues at once.
Like what?
Gender inequality in a traditionally male-dominated field.
Right.
And the growing demand for skilled electricians in India.
Makes sense.
It's not just about training, though, right?
Yeah. Oh.
Are they actually helping these women find jobs?
Absolutely. In fact, 6 women from the program have already secured jobs at Mahindra & Mahindra Ltd.
Wow, that's great.
It's a concrete example of how Saksham is creating real opportunities for women.
Real opportunities.
To build successful careers in the manufacturing sector.
That's amazing. It was one thing to talk about empowering women. It's another to actually see it happening on the ground.
I agree.
Okay, what about Jai Jeevan? What's the focus there?
Jai Jeevan is all about promoting sustainable agriculture. They've partnered with Vinarai, an NGO that works on watershed development and rural empowerment.
Okay.
To help women's self-help groups in Maharashtra produce Dushparniark.
Dushparniark. That sounds intriguing. What is it?
It's a biopesticide made from a blend of 10 different herbs.
Herbs.
So not only is it effective in protecting crops from pests, it's also eco-friendly, reducing the reliance on harmful chemical pesticides.
So they're supporting sustainable farming practices.
Sustainable farming.
While also empowering women entrepreneurs.
Empowering women.
It's a win-win.
Yeah.
But has this initiative actually made a difference in the community?
Absolutely. The women involved in the program have been able to reduce their reliance on expensive chemical pesticides.
Expensive pesticides.
Saving an estimated 90,000 to 100,000 rupees.
Wow.
That's a significant amount for these families.
It is.
And it demonstrates the tangible impact of CGCEL's CSR efforts.
Okay, on to the third initiative, Nayi Disha.
Nayi Disha.
What's their mission there?
Nayi Disha focuses on empowering youth through skill development.
Skill development.
Again, they've partnered with Tata Strive.
Tata Strive again?
This time to provide electrical work training to young people from local villages.
So it's all about equipping them with the skills they need.
The skills they need.
To secure good jobs and build a brighter future for themselves. It's great to see them investing in the next generation.
The next generation.
And giving them a leg up in a competitive job market.
It is a competitive job market.
But it seems like their CSR efforts go beyond these three main initiatives.
Like what?
They also mentioned their involvement in flood relief efforts in Wayanad.
Oh, right.
They partnered with Action Aid to distribute dry rations to those affected by the devastating floods in Wayanad.
Yeah, it's a reminder that CSR isn't just about long-term programs. It's also about responding to immediate needs and supporting communities in times of crisis.
It shows they're not just writing checks. They're rolling up their sleeves and getting involved on the ground.
They are.
And their efforts haven't gone unnoticed.
What do you mean?
Remember, they received an award for their Jal Jeevan program.
Jal Jeevan.
Which focuses on water conservation.
It's a testament to their commitment to sustainability and their impact on the community.
So to wrap it all up, it's clear that CGCEL is taking CSR seriously. They're not just ticking boxes. They're actively engaging with communities, partnering with organizations, and implementing programs that are making a real difference.
Making a difference.
And this is something that both investors and consumers are paying more attention to.
I agree.
A company's CSR initiatives are increasingly seen as a reflection of their values and their commitment to being a force for good in the world.
A force for good.
It's no longer just a nice-to-have, it's a must-have for any company that wants to be successful in the long run.
The long run.
Well, this brings us to the end of our deep dive into Crompton Greaves Consumer Electricals Ltd.
Crompton Greaves.
We've analyzed their financials, dissected their growth strategy, explored their digital transformation, and even delved into their CSR initiatives.
We covered it all.
It's been quite a journey, and I think we can safely say that CGCL is a company that's worth watching.
Definitely.
They're firing on all cylinders, delivering strong financial performance, pursuing ambitious growth plans, and demonstrating a genuine commitment to sustainability and social responsibility. But as we all know, the business world is constantly changing.
Always changing.
New challenges and opportunities will inevitably arise.
Inevitably.
So the big question is, how will CGCEL adapt and evolve in the face of these changes?
Yeah. How will they?
Will they continue to innovate and stay ahead of the curve?
Stay ahead.
Will they maintain their commitment to sustainability and social impact as they grow?
That's the question.
Those are questions only time will tell.
Only time will tell.
But one thing's for sure. It's going to be fascinating to watch their journey unfold.
It will be.
Absolutely. And for anyone listening, remember, knowledge is power.
Knowledge is power.
So keep exploring, keep asking questions, and keep diving deep into the companies and industries that matter to you.
Couldn't have said it better myself.